So today we will discuss next module, can you see my screen?
Yes, sir.
Yes, sir.
So next module, cost accounting. See, the first phase of accounting is financial accounting, which records, summarizes, and analyzes the transactions of financial character. Now, the second phase of accounting is cost accounting. This is a technique for ascertainment and control of cost. Financial accounting deals with the financial transaction, but cost accounting deals with the ascertainment of cost and its cost control. So the main aim of cost accounting is to ascertain the cost of a product, the total cost of a product that can be determined. And at the same time, the cost shall be minimized or controlled. So there are certain methods and techniques for the cost ascertainment and other methods and techniques for cost control. So cost accounting includes methods and techniques for cost ascertainment and cost control. So ascertainment of cost, controlling of cost, and reducing of cost. These are the three main objectives of cost accounting, the second phase of accounting. So we will come to the definition of costs. Cost means amount of expenditure incurred or attributable to a thing. Amount of expenditure incurred for a particular product. So, for example, for producing a particular product, what is the total expenditure incurred on it? The total expenditure incurred for the production is called cost. But practically, we mean the expenditure incurred from the acquisition of raw material, then its process, and up to the point where the finished products are released. And all these expenditure on different stages, and that can be added. Therefore, the total expenditure incurred for producing a product is called as cost. So that is why the definition is cost means the amount of expenditure incurred on a given thing. See, the different components of cost. The first component is prime cost. This is the first cost, which means all the direct expenditure, the sum total of all direct expenditure. So, for example, for producing a particular product, we need raw material. Cost of raw material is a direct expenditure. In order to convert the material into finished products, labor cost must be there. So the labor cost is another direct expenditure. Then there are certain expenditure that shall be directly incurred for producing the product. These are called direct expenses. So, direct material, direct labor, and direct expenses, all these are to be added, then we will get the prime cost or the first cost or the flat cost. First cost, flat cost, prime cost. These three are the same, which means the direct expenditure, otherwise called direct material, direct labor, and other expenses, all these are to be added, then we will get the first cost, flat cost, or prime cost. The expenditure on direct material, direct labor, and direct expenses, all these shall be added to get the prime cost. This is very important because normally we can expect this question, what is prime cost? Then there is another important point. It may also be noted that there is no such thing as an exact cost or a true cost, because no figure of cost is true in all circumstances and for all purposes. Say, for example, depreciation. Depreciation, normally we will debit in the P&L account as per the principles of financial accounting. But depreciation cannot be treated as an expenditure in cost accounting. And its amount varies in accordance with the method of depreciation being used. Therefore, the depreciation cannot be considered as an expenditure for the calculation of costs. Then what are the elements of cost? I have already explained. Direct material, then indirect material. That means the material that shall be indirectly used in the production function. This is called indirect material. Labor, similarly, direct labor, the total labor cost incurred for the production of a particular component. Indirect labor, sometimes there may be the need for labor force. Such a force can be employed not directly but indirectly. Then it is called the indirect labor cost. Similarly, the expenses may be direct or indirect. So this is a classification of costs. Direct labor, indirect labor. Direct material, indirect material. Direct expense, indirect expense. So direct expense are those expenses shall be directly related to the production function. And some of the expenditure which are indirectly related to the overall expenditure for the component of and its production, then such expenses are called indirect expenses. See this diagram. Cost may be classified into three: material, labor, other expenses. Again, each component shall be classified into two: direct and indirect. So this is a cost structure of a particular product manufactured in the production center. Cost classified into three: material, labor, and expenses, and each component, that means material, labor, and expenses, again be classified into direct and indirect. Then overhead. This is another important question for examination. What is overhead? The overhead include indirect material, indirect labor, indirect expenses. See in the diagram, material may be direct and indirect. Labor again classified into direct and indirect. Expenses classified into direct and indirect. And all the indirect portions are summed up. Then we will get the overhead, which means overhead includes indirect material, indirect labor, and indirect expenses. Again, a manufacturing organization can broadly be divided into three divisions: factory division, office administration, and selling and distribution. Goods are produced in the factory, and in order to produce such goods, there is a facility of office administration. Then such a goods shall be sold off in the open market or distributed to the market. Then again we will need the office administration. So factory expense, office and administration expense, and selling and distribution expenses, and all these are again called as overhead. So overhead may be indirect material, indirect labor, indirect expenses, which shall be occurred at the time of producing the product in the factory or the work center. Then such products are sold off in the open market or distributed to the target market. There is a need for office and administration. All these expenses are covered under the head overhead. Then factory overhead. Indirect material used in the factory, indirect labor used in indirect labor costs or indirect labor employed in the factory, and some of the indirect expenses, or these are called the factory overhead. Factory overhead. That means the indirect expenses incurred in the factory. Again, office and administration expenses. Some of the expenses that shall be incidental to the functioning of office and administration, then we will call it as office and administration overhead. At the same time, when we distribute such products from the factory to the target market, there is a possibility of incurring certain indirect expenses, and such indirect expenses are called selling and distribution overhead. So overhead means indirect expenses that shall be classified into indirect labor, indirect material, indirect labor, and indirect expenses. And here we have office and administration overhead, selling and distribution overhead. Please see this particular diagram. Overhead that shall be incurred in the factory, and also it shall be incurred in association with the office and administrative activities, and selling and distribution function we will have again office overhead. Then indirect material, indirect labor, indirect expenses in the factory, indirect material, indirect labor, indirect expenses in connection with the office and administration, indirect material, indirect labor, indirect expenses in connection with the selling and distribution function. So all the indirect expenses are called overhead. Overhead means indirect expenses. Then components of costs. I have already mentioned prime cost, first cost, or flat cost, which means that in the sum total of direct material, direct labor, and direct expenses. Factory cost, which means indirect material, indirect labor, and indirect factory expenses. So prime cost, factory cost. Office expenses, again there are certain expenditure in connection with the office which assists the production function and distribution function. Therefore, all the expenses incurred in the office premises is called office cost. So the total cost means prime cost plus factory cost plus office and administration cost. These are the total costs. See, direct material, direct labor, direct expenses. Otherwise called prime cost, direct cost, or first cost, or flat cost. Then prime cost, we will add a work overhead. That means factory overhead. Then we will have added office and administration overhead. Again, we will add selling and distribution overhead. All the heads are again added together. Then we will get the cost of sale and the total cost. So total cost has many components: direct material, direct labor, direct expenses, then factory overhead or work overhead, then office and administration overhead, and the selling and distribution overhead. And all the components are combined together, we will get the cost of sale or the total cost of a particular product produced in the factory. Then cost sheet. The elements or components of total cost can be presented in the form of a statement, particularly known as cost sheet. So cost sheet is a particular document or statement of costs which include each and every component of cost, and that shall be added to get the total cost of a product or total cost of sale of a product, which include the direct expenditure and indirect expenditure. Again, direct material, direct labor, and direct expenses. Then we will get the prime cost. We will add the factory overhead. Then we will get the work cost. Again, we will add a sales, office and administration expenses. Then we will get the total cost or total cost of sale by adding the distribution expenses, selling and the distribution expenses. So components of cost, various components of cost, direct and indirect. Then all the components of cost shall be added together. Then we will get the total cost or total cost of sale. See, one illustration. Let us prepare a cost sheet for a company showing different components of cost. Raw material or consumed or wages. Raw material consumed wages paid to laborers directly chargeable. That means raw material, wages, and directly charged expenditure 80,000. This 80,000 is the direct expenditure. Then expenses of oil and waste. This is a factory expenses. Wages of foreman, again factory expenses. Storekeepers' wages, electric power. Power is used in the factory. Then lighting factory and office. Rent factory and office. Repairs and renewals. Factory rent. Then machinery, office premises, depreciation, plant and machine depreciation. Then consumable stores, manager's salary. That is an office expenditure. Director's fee, office expenditure. Office printing, office expenses. Telephone charges, office expenses. Postage, office expenses. Salesman salary, selling expenses. Traveling expense, selling expenses. Advertisement, selling expenses. Warehouse charges, selling expenses. Carriage outweighed selling expenses. Then we will prepare a cost sheet. Based on all the expenses incurred, then we will prepare the cost sheet. And how to prepare the cost sheet? Direct material, raw material consumed 80,000. Direct labor, wages paid to laborers 20,000. Direct expenses 4,000. And we will get the prime cost. So prime cost or flat cost or first cost means all the direct expenses shall be added together. The sum total of all the direct expenses, which include direct material, direct labor, direct expenses, and we combined all these expenses together, we will get the prime cost. And against the prime cost, we will add factory expenses, factory overhead, indirect material used in the factory, consumable stores used in the factory, oil and waste used in the factory, indirect labor, which means wages of foreman, storekeeper wages, and again indirect expenses such as electric power, factory lighting, factory rent, repairs, plant and machine repairs, then depreciation, plant and machine. Then we add such indirect expenses, factory indirect expenses, then we will get factory or work costs. Against factory or work cost, we will add office expenses. Office expenses include office and administration overhead, indirect material used in the office, office printing, manager salary, director's fees, office lighting, office rent, repairs and renewals in the premises, that means office premises, depreciation on premises, telephone charges, postage, all these are office expenses, and we will add all such office expenses together, then we will get the cost of production. Cost of production. Then we will add selling expenses. What are the selling expenses here? Salesman's commission and salary, traveling expenses, advertising, warehouse, carriage outward. Then we will get the cost of sale. So cost of sale 1,30,600 calculated under different records. Prime cost, we will add all factory expenses, then we will get the work cost, we will add again all the office expenses, we will get the cost of production, and finally we will add all the selling and the distribution expenses, and we will get the cost of sale. So cost of sale is the last cost of a product started produced in the factory up to the point where such products are launched in the target market. So cost of sale 1,30,600. Here, by adding all the direct expenditure together, we will get the prime cost. All the factory expenses we will add against the prime cost. Then we will get the work cost. All office and administration expenses again added. We will get the cost of production. And finally, the selling and distribution expenses must be added. Then we will get the cost of sale. So this is a way in which a cost sheet shall be prepared from the expenses or the cost presented under different effects. Then a classification of cost. So another classification. Already we have classified direct expenditure put together, prime cost. Indirect expenses occurred in the factory cost. Office expenses, indirect. We will add office expenses, then we will get the cost of production. And selling and distribution expenses, indirect expenses, we will add, then finally we will get the total cost of sale. Here, the classification of cost in another dimension. This is very important. Fixed, variable, and semi-variable expenses. Fixed cost, variable cost, and semi-variable cost. Fixed costs remain constant irrespective of the level of production. Suppose the production is zero, that means there is no output in the factory. Then we will have certain expenditure incurred. This is called a fixed cost. If the factory is running at 10% of its capacity, or the factory is running at 50% of the capacity, or even 80% of capacity, or 100% of full capacity, that cost which remain constant. There is no increase or decrease of such cost, irrespective of the level of functioning of the factory or the establishment. Then such costs are called fixed costs. The costs which remain constant, irrespective of the level of activity. Variable, that means if there is production, there are certain expenditures. This is called variable expenses. If there is no production, there are certain expenses. Such expenses are called fixed expenses. But variable expenses are those expenses that shall be incurred only when there is production in the factory premises. But some of the expenses, partially it is fixed, partially it is variable. That means if there is no production, such expenses will be there. But if there is production, again, some of the expenditure that will come. It is called a semi-variable. One portion is fixed, another portion is variable. So, based on another dimension, cost can be classified into three: fixed, variable, and semi-variable. This classification is very, very important when you take decisions or when you solve the decision-making problems in the next module, marginal costing. See, fixed costs remain constant in this graph. The straight line, that means the cost which remain constant. The cost cannot be increased. It should not be decreased. There is a fixed amount that shall be incurred, whether the production is zero or the factory is running at 100% capacity. The cost which remain constant irrespective of the level of production. Production in 1,000 units. 4, 0. Production if the production is 0, or if the production is 1 or 2 or 3 or 4, such a cost cannot be changed. That is why this is a straight line. So that is the impact of fixed costs. See, in this graph, we have variable cost. 0, production is 0. Variable cost is also 0. The production is 1 and the variable cost is increasing trend it show in the graph. The production is 2. There is increasing tendency of variable cost. And if the production is 4, automatically the variable cost is increasing based on the increase in the level of production. So this is the influence of variable costs. See, a company has provided the following information in respect of 1,000 units. That means the production number of units produced in the factory 10,000 units. Let us calculate the total cost for 12,000 units of an output and the cost per unit with the following information. See, currently that organization is producing 10,000 units. Let us calculate the total cost for 12,000 units. See, currently that particular establishment is producing 10,000 units. And you are directed to calculate the cost for 12,000 units. That means there is an additional production of 2,000 units. What will happen? Variable cost 50,000. Semi-variable cost fixed cost 30,000. Semi-variable cost 50% fixed, 50% variable. Out of the 80,000 fixed, 50% is fixed and another 50% is variable. That means 40,000 is fixed, 40,000 is variable. And this is a cost incurred for producing 10,000 units. A company has provided the following information in respect of 10,000 units. So in order to produce 10,000 units, the variable cost is this much and fixed cost is 30,000 and semi-variable cost 40,000 fixed, 40,000 variable. We want to calculate the estimated cost of production of 12,000 units based on the information furnished for 10,000 units produced. We will calculate the estimated cost of 12,000 units produced. So here the output 12,000 units. What is the variable cost here? In order to produce 10,000 units, the variable cost will be 50,000. Therefore, the cost per unit is 5. For producing 10,000 units, the total variable cost 50,000, which means 50,000 divided by 10,000 is equal to 5. So variable cost per unit is 5. So 12,000 units produced, then 12,000 into 5, 60,000. At the same time, whether the firm or the establishment produced 10,000 units or 12,000 units, the fixed cost remain constant. So fixed cost remain constant 30,000. That cannot be increased if the firm produced 12,000 units or 10,000 units. It remains constant. Therefore, fixed cost 30,000. But here, the 80,000, 50% is fixed. So again fixed 40,000. And remaining portion 80,000, out of 80,000, 40,000 is fixed. The remaining portion 40,000 is variable. So in order to produce 10,000 units, the semi-variable cost is variable portion is 40,000. Therefore, cost per unit is equal to 4. and this for into 12,000, so 48,000 total semi-variable cost, including its fixed character 40,000, and now the 48,000. Then we will have 88,000 semi-variable cost. Therefore, the total cost is 1,78,000, and cost per unit is equal to 1,78,000 divided by the proposed production 12,000 is equal to 14,000. So 14.83. 14.83 per unit, the total cost. See, out of this example, what we will understand? The information given is for the producing 10,000 units. Variable cost 50,000 for producing 10,000 units. In order to produce 12,000 units, automatically the variable cost is increased. What is variable cost? The cost that can be increased due to the increase in the level of production. Fixed cost, it remains constant. Out of the semi-variable cost, 80,000, 50% is fixed. Therefore, 40,000 fixed. Remaining 40,000 variable, it shall be again increased when we produce 12,000 units instead of 10,000 units. So here, the total semi-variable cost is 88,000. And the total cost is variable cost plus fixed cost plus semi-variable cost is equal to 1,78,000 for producing 12,000 units. Therefore, cost per unit is equal to 14.83. Again, direct and indirect cost, I have already explained. What is the meaning of direct and indirect cost? Then, in terms of your own organization, give 5 examples of each of the following: direct cost, indirect cost, fixed cost, variable cost, and semi-variable cost. So this is something about the concept and the classification of costs. Then there are some technical terms. Shutdown cost, which represents the fixed cost that have to be incurred even when a factory is shut down. If there is no production in the factory, there are certain expenditure continuously incurred. This is called a shutdown or sunk cost. Then controllable and uncontrollable. Some of the costs that can be controlled by taking managerial decision. It is called controllable. But there are certain cases where some costs are not controlled by taking rational decision by the management. Such costs are called uncontrollable. Controllable and uncontrollable. Hypothetical or imputed, these costs that do not involve cash outlay. There are certain expenditure, but there is no cash outflow. Such expenses are called imputed or hypothetical costs. Incremental or decremental cost. The difference in the total cost between two alternatives is termed as differential cost. For producing a particular component in one way, then we will have the total cost. In another method, we will have production, then the total cost, and the difference between these two total costs because of the two alternative production method, it is called a decremental or incremental cost. Then another important term, opportunity cost. Opportunity costs refer to the advantage in measurable terms which have been forgone on account of not using the facility in the manner originally planned. See, the cost incurred for avoiding the best alternative. See, when we consider a production method, we have many production methods scheduled by the production engineer. We select the best one. Instead of selecting the best one, we select another method. Then we have incurred certain cost or certain loss due to the non-selection of the best alternative. And such a cost or loss is called opportunity cost. This is very, very important in the cost accounting. This particular cost, this particular term is very, very important in the cost accounting. Opportunity cost. That means the cost incurred for avoiding the best alternative. We have not selected the best alternative. So that is why we will incur certain loss. Such a loss or such an expenditure shall be called as opportunity cost. Okay, then coming to the next topic, next module. Absorption costing. This is the most important module. Marginal costing and absorption costing. The most important module in cost accounting. Absorption costing is a technique of costing. See, methods of costing and techniques of costing. Cost accounting include methods and techniques of costing for the cost ascertainment and the cost control. So here, absorption costing. Absorption costing technique is also called a traditional or full cost method. According to this method, the cost of a product is determined after considering both the fixed and variable costs. Total cost shall be classified into fixed and variable. The costs which remain constant irrespective of the level of activity. The cost that can be varied according to the level of production. Then such a classification is the base of absorption costing. It is otherwise called a traditional or full cost method. Traditional or full cost method. But marginal costing is something different. It is one of the technique of costing for cost control. It is a method or technique of costing, and actually it is a definite improvement of absorption costing. And here, in the absorption costing, we consider fixed and variable cost together. But in marginal costing, it considers only the variable cost. Total cost can be classified into fixed and variable. If we consider both the component, fixed and variable, this is called a absorption costing. We consider fixed and variable cost together, it is called absorption costing. But the marginal costing, it considers only the variable cost, because fixed costs remain constant. If there is no production, there must be some cost. If the firm is or the establishment is working at 100% capacity, then that cost cannot be changed. That part of the cost cannot be changed. And this is called a fixed cost. And fixed cost cannot be considered in marginal costing. The marginal costing is basically the interplay of variable cost only. The idea behind the consideration of variable cost only is like this. If we do not have production in the factory establishment, the cost remains constant. That cannot be eliminated. There are certain costs that can be incurred whenever there is no production. But if there is production, if the establishment is running at 100% capacity, that cost again remain constant. That cannot be changed. Therefore, we consider only for variable cost. If there is production, there are certain costs. Such a cost is called a variable cost. So the marginal costing considers only variable cost for the calculation of cost of production. But in the absorption costing, we consider variable cost and fixed cost together for the calculation of total cost of production. And here, the total cost of production include variable cost only or the marginal cost only. So this is the cream of marginal costing. Marginal costing is the interplay of marginal cost or the variable cost. It considers only variable cost for the calculation of total cost of production. See, This is a particular direct material, total 5,000, direct labor 4,000, variable overhead 1,000, total marginal cost or variable cost 10,000, sales less marginal cost or variable cost is equal to contribution, total sale. So here total contribution 21,000, and the fixed costs we can deduct from the contribution, then we will get the profit. So in order to get the profit, firstly the variable cost shall be deducted from sale. Sale minus variable cost, because marginal cost considers only variable cost. Sales minus variable cost is equal to contribution. From the contribution we will deduct the fixed cost. It remain constant, then we will get the profit. But the total cost of production and the marginal costing is only the total of variable costs. So that is the difference between marginal costing and absorption costing. That is very, very important question. Difference between absorption costing and marginal costing. Marginal costing considers only variable cost, while absorption cost considers fixed cost and variable cost together for the calculation of the total cost of production. Absorption costing and marginal costing differences. This is a very, very important question for examination. See, in the absorption costing system, three products, A, B, C, three products. For product A, direct material, direct labor, and variable expense, total marginal cost. Then we will add a fixed cost. Total cost of production 9,000, less closing stock. Then the cost of goods sold 8,100 less, and its profit is 900. And how the profit is calculated? Here the cost of goods sold 8,100 and estimated profit 900. Then we will have the estimated sales 9,000. So in this calculation, we consider fixed cost and variable cost together. So this is the effect of absorption costing, in which these two components, variable cost or marginal cost and fixed cost, we combine together. We consider fixed cost and marginal cost or variable cost equally. But what will happen in marginal costing? Total variable cost for producing the first product A, 6,000. Closing stock shall be deducted. So cost of goods sold 5,400. Then the contribution 3,600. And sales is 9,000. And in this particular marginal cost statement, there is no fixed cost can be seen. Fixed cost cannot be taken into consideration in the statement of profit as per marginal costing. In the statement of profit prepared as per marginal costing, there is no fixed cost, because fixed cost has no relevance in marginal costing. In marginal costing, only we consider variable cost. So that is the difference between absorption costing and variable marginal costing. Marginal cost and variable cost. What is the difference between marginal cost and variable cost? Marginal cost means the additional cost incurred for producing one additional unit. Additional cost incurred for producing one additional unit is called a marginal cost. And variable cost and marginal cost are same. What is the definition of variable cost? The cost that can be changed according to the changes in the level of production. If we have no production, that means the establishment is running at a 0% capacity, no production, no cost. If the establishment is working at 100% capacity or full capacity, there must be one cost element that can be changed from 0 to 100, or depending upon the level of activity, then it is called a variable cost. So marginal cost and variable cost, technically these two are the same. Then already I have explained what is semi-variable expense. One level it is fixed. In another level it can be varied. There are certain expenditure in which certain portion remain constant, and another portion it can be varied according to the level of production. This is called a semi-variable expenditure. Then contribution, this is very important. Contribution means sales minus variable cost. Sale minus variable cost is called a contribution. That contribution is equal to fixed cost plus profit. What is profit? Sales minus cost. Sales minus cost is equal to profit. Sales minus variable cost minus fixed cost is again profit, because the total cost includes fixed and variable. Total cost can be classified into fixed and variable. If we deduct fixed cost and variable cost from the sale, we will get the profit. Therefore, selling price or sale minus variable cost, which must be equal to fixed cost and profit. In marginal costing, sales minus variable cost is equal to contribution, because the marginal cost does not consider fixed cost. But in the absorption costing, the selling price minus variable cost minus fixed cost is equal to profit. Why? The absorption costing considers variable cost and fixed cost equally, but in marginal costing, we will not consider fixed cost. The marginal costing technique considers only variable cost. Therefore, sales minus variable cost is equal to contribution in marginal costing. If we deduct fixed cost from the contribution, we will get the profits. Then break-even analysis. This is very interesting. The problems comes under the break-even analysis is something interesting, because the break-even analysis is based on this formula. What is this formula? Sales minus variable cost is equal to fixed cost plus profit. Sales minus variable cost is equal to contribution. If we deduct the fixed cost from the contribution, we will get the profit. And this is the marginal costing equation. Sales minus variable cost is equal to fixed cost plus profit. Based on this equation, we will have the relationship between sale, variable cost, then contribution, fixed cost, profit, and such type of analysis is called a break-even analysis. Then break-even point, that means the point at which the business concern has no profit or no loss. Sales minus variable cost is equal to contribution. If that contribution is equal to fixed cost plus profit, and that is the equation, sales minus variable cost is equal to contribution, that contribution must be equivalent to fixed cost, then we will get the break-even point. The point at which the business firm has no profit or no loss, or the point at which the contribution and the fixed cost both are equal. Technically we speak, contribution and fixed cost, if these two costs are equal, then we will get the break-even point, the point at which the business concern has no profit, no loss. And another one, utility of marginal costing or importance of marginal costing helps in determining the volume of production. What is the principle? In marginal costing, we have certain expenditure, it remains constant. This is fixed expense. That cannot be considered by the marginal costing. Marginal costing considers only variable cost. Therefore, in order to fix the production level, we will consider only variable cost. Helps in selecting production lines. If we add more and more product into the existing product, there are certain expenditure that remain constant when we add more product into the product line. Then helps in deciding whether to produce or procure. Whether to produce a component in our factory, or whether to produce or purchase a particular component from the open market, And that decision can be taken by considering variable cost only, because the fixed cost remain constant. Helps in deciding the method of manufacturing. Method of manufacturing. Fixed cost remain constant. Then we will consider the variable cost in association with the new manufacturing method, and helps in deciding whether to shut down or continue, whether the factory is closed or whether the factory is continuing its production with the loss. That can be decided by considering the volume of variable cost incurred in the factory. And limitations of marginal costing, another important section. Difficulty in the classification of cost between fixed and variable element. Fixed and variable classification. Sometimes it is very difficult to bifurcate the total cost into fixed cost and variable cost. Difficulty in application. The marginal costing technique is based on variable cost only. Marginal costing does not consider fixed cost. So it is very difficult to bifurcate the total cost into fixed and variable cost. Therefore, the applicability of such a method for the cost control is something difficult. So today I have completed 2 modules, and this module is very important: marginal costing and absorption costing. A lot of questions you can expect from this module. But before understanding this module, or before reading this module, the first one I explained today, the classification of cost accounting, cost classification of cost in different dimension, and you should understand that particular module firstly, then read this particular module. And if you have given me again another day, I will complete the remaining modules, because tomorrow I will not be here. And if you telephone personally, I can come to the online and discuss other modules. So today I will stop here. Thank you. Thank you very much.